Good morning. It's Thursday, the 6th of March, and this is Govindraj Ethiraj, headquartered and broadcasting and streaming as always from Mumbai, India's financial capital. The take. US President Donald Trump clearly wants to remind India that the threat of reciprocal tariffs is not going away. For whatever reason, it seemingly stays on top of his mind and recall, along with his other trading enemies like China, Canada, Mexico, and of course, India. India charges us 100% tariffs. The system is not fair to the United States. It never was. On April 2, reciprocal tariffs kick in. Whatever they tax us, we will tax them. If they use non-monetary tariffs to keep us out of their market, then we will use non-monetary barriers to keep them out of our market, Trump said while addressing a joint session of the US Congress on Tuesday. India's trade minister, who has rushed to the US over the weekend to find some common ground, clearly has his task cut out. So the larger question posed earlier on the core report as well is, what should India do? Now, the simple and straight answer is to use this as an opportunity and reduce tariffs because we need to. A new report in the Business Standard by Abhishek Anand of Madras Institute of Development Studies, Soumitra Chatterjee of Johns Hopkins University, Josh Feldman of JH Consulting, and Arvind Subramaniam of Peterson Institute has argued that with manufacturing tariffs averaging 13.4%, more than 3 times as high as in the US or Europe, and agriculture tariffs even higher than those for manufacturing, India does have one of the most restrictive trade regimes in the world. Moreover, they argue that the tariff system is highly complex. In 2024, before the rationalization in the recent union budget, India had no less than 65 different ad valorem applied rates and 145 unique specific tariffs, according to official data submitted by the government to the World Trade Organization. Now, this is because India imposes a web of cesses on top of its standard most favored nation rates. And then there are significant non-tariff barriers like the newly imposed quality control orders or QCOs, which further complicate trade because a quality control order essentially means the Bureau of Indian Standards has to establish that a product is meeting quality standards before that imported product can be sold in India. In theory, it's a good idea, but in practice, a nightmare for importers going by several accounts. The authors say that India's goal of raising manufacturing's share of GDP and boosting exports has not worked, and the ratio has only declined, as has the share of global manufacturing exports that create the maximum jobs. Now, while there are many reasons for all of this, the key argument is also articulated by Dr. Arvind Panagariya, chairman of the 16th Finance Commission and former vice chairman of Niti Aayog, is that exporting requires importing. He told this writer in an interview last year that a good way to think of it is the extreme. Suppose you were to raise the tariffs to a level where your imports are zero. There would be no reason to export. There would be absolutely no reason to export, and that is what we did for about 4 to 5 decades, he told me. Now, back to the authors, they say that if India wants to produce garments competitively, and more on that shortly, it needs to offer firms access to competitively priced inputs, which often come from outside the country. So, when the government makes importing man-made fibers difficult, it kills garment export activity, the authors have argued. They've also outlined several structures and a uniform tariff, including cesses of between 5 and 10% on final goods. This, by the way, is what a reciprocal tariff with the US could also land up at or lead to. India's all trade applied duties is around 17%, while the US is 4%. By the way, Trump has also emphasized that the United States will retaliate on non-tariff barriers as well, exactly like the QCOs or quality control orders. This is not the time I would want to be sitting in the Ministry of Commerce and the Department of Foreign Trade. Now, while cutting tariffs, as the authors point out and others have acknowledged, will create problems and maybe even shocks to domestic industry or parts of it, it is perhaps a good time to return to the path we were following until around 8 to 9 years ago, which is the point at which average tariffs were lower than what they were today. A path we have little choice but to adopt, at least in the case of the USA, because we are under close watch, quite evidently. And that brings us to the top stories and themes. The stock markets stage a smart rebound. Will they hold? India's apparel export industry actually hopes to benefit from the latest tariff war. Reliance Retail's valuation is half of what it raised funds at 2 years ago as the company embarks on cost cuts. India's obesity levels are rising, and why that is an issue individuals and organizations should be talking about.
This is a core report with Govindraj Ethiraj.
The stock markets recover smartly. Maybe the foreign portfolio investors who've been selling consistently in India took a break to focus on Wall Street, where stocks got hammered for the second consecutive day on Tuesday, or maybe it was just what is called a dead cat bounce. Whatever the reason, the indices rose the highest since February 4th on Wednesday, thanks to IT and metal stocks to close higher by over a percentage. A dead cat bounce is called so, by the way, because even a dead cat will bounce if dropped from a great height. Meanwhile, the 30 stock Sensex retreated from its day's high but did not fall further and actually closed 740 points higher at 73,730, and the Nifty 50 was up 254 points at 22,337. Importantly, the markets recovered after losing and sliding continuously for almost 10 whole trading days and close to 4% in the case of the Nifty 50. Broader indices mirrored the benchmarks with small cap shares going ahead as the Nifty Small Cap 100 index was up close to 3%. The Nifty Mid Cap 100 index was up about 2.5%. On Wall Street on Tuesday, tariff jitters sent the markets diving with the Dow falling 670 points or 1.5%, the S&P about 1.2%, and the Nasdaq Composite about 0.3%. CNBC reports that the tech-heavy Nasdaq has now come within striking distance of correction territory, a term that refers to an index falling 10% from a recent peak. Conflicting signals continue to emerge from the Trump administration, with the Commerce Secretary there saying the United States might meet Canada and Mexico in the middle to work out tariffs, and Trump saying that a little disturbance from the levies was okay. Tariffs are about making America rich again and making America great again, and it's happening, and it will happen rather quickly, he said. Incidentally, gains made by the S&P 500 as it rode the victory wave of Trump's victory on Election Day have now vanished, according to reports. Tech stocks have also been beaten down since Trump's inauguration in January, and CNBC reported that the tax on imported goods from other countries is starting to look like one on stocks too. Back home, the rupee rose on Wednesday too, along with most Asian currencies, as the dollar was weaker as well, and the rupee closed slightly higher at about 86 rupees 95 paise against the US dollar, which was its best single-day gain since February 11th, according to Reuters. And of course, the good news on oil prices continues, with Brent crude prices falling for the third day on Wednesday as traders braced for supply increases from the Organization of Petroleum Exporting Countries Plus. Lower oil prices will obviously help reduce India's import bill and thus inflationary pressures on the economy. Brent futures fell about $1 and are now around $70 a barrel for a barrel of crude, that is. Reliance Retail is cutting back. In what appears to be a sign of overestimation of market and the shrinking of it, Reliance Retail is set to cut back on store expansion and marketing budgets, even as it tries to defend the valuation at which it raised funds 2 years ago, according to Bloomberg. Retail and telecom have been the group's diversification bets in recent years in an attempt to reduce dependence on the traditional oil-to-chemicals portfolio, which of course continues to do well and has been performing steadily. Reliance Retail is overhauling a retail empire that sells everything from a 20-cent soda to a $5,900 Versace dress, as they seek to reassure investors and see for an exit option in the form of a public listing, Bloomberg reported, adding that slowing sales is a concern for Reliance Retail Ventures after brokerages pegged its valuation as low as $50 billion, which is half the amount at which it raised money 2 years ago. Reliance chairman Mukesh Ambani apparently acknowledged to investors in recent discussions that the retail entity, part of a push to diversify the Reliance empire, had grown too big too quickly as a result of expanding across formats and geographies, while on the other hand, Reliance has been slowing down on expansion for some time now, something that several brokerages who've done channel and market checks have been reporting, including the shutting of stores and terminating leases for them. The decisions are meant to signal progress to investors seeking better valuations after brokerages like Kotak Institutional Equities and Sanford Bernstein cut the company's valuation in 24, said Bloomberg. And this year, Ambit Capital analysts pegged the company's worth to be $50 billion, a steep discount to the $125 billion valuation Reliance is hoping for an IPO, according to those sources who spoke to Bloomberg. Several investors, from the Qatar Investment Authority to General Atlantic, had invested about $8.2 billion between 2020 and 2023 for a roughly 12% stake in the firm, according to Stanford Bernstein analysis. Reliance Retail has a very diversified operation that spans about 60 units, ranging from mass market to luxury superstores, beauty and clothes apps, and of course its quick grocery delivery platform JioMart. Reliance Retail clocked about 273,000 crores of revenue, that's about $31 billion, and about 11,000 crores of profit in the fiscal year ended March 24. It had about 19,100 stores and about 340 million registered customers, according to that Bloomberg report. India's apparel industry is expecting better times. With reciprocal tariffs on India by the US now less than a month away, as per President Trump's promise on Tuesday, exporting industries are obviously and furiously examining the options and opportunities if so. There are a lot of granular details on what India could give in exchange, for example, reducing duties on import of cotton from the US in exchange for leniency in apparel exports. Now, how this will exactly play out is not clear, but not just to me, but to people in the industry as well. On the other hand, export of garments jumped to $1.6 billion for the month of January. This is not likely to be a record high, but is definitely a high, particularly for recent times. Prabhu Dhamodharan, convener at the Coimbatore-based Indian Texpreneurs Federation, which represents close to 450 spinning, weaving, apparel and home textile companies, told me that Indian manufacturers have actually stepped up their imports of machinery in recent months in anticipation of increased business, which would suggest that in an era of uncertain tariffs, the apparel and textile industry seems to be more confident of growth than maybe other industries, at least going by that one metric. I reached out to Mr. Dhamodharan and I began by asking him how the industry was gearing up for the latest deadline of April 2nd for reciprocal tariffs and how that could roll out for India given all the other tariff wars that were going on.
Actually, now everyone realizing that trade war is real. So we are getting flood of informations on a daily basis, and every country, every sector will try to minimize the impact and also look for opportunities. Particularly now the recent announcement on the tariffs on Mexico. Mexico is 8th largest exporter to US and around 4 to $4.5 billion of apparel and non-apparel textile items they are exporting every year. Suddenly the tariff will make the products expensive, and particularly if you see the product segments, around $2.5 billion of cotton apparels they are exporting and around $1.5 billion of cotton apparels and $1 billion of MMF apparel they are exporting. Naturally, immediate reaction will be buyers will look for alternate supply chains, and naturally cotton apparel will come to India and Bangladesh, and MMF apparel may move to Vietnam and Cambodia. This is what the Mexican tariffs will make trend clear, number one. Number two, this is current month trend. We don't know what will happen next month. Compared to its relative terms, we are now cheaper. After some period of time, things may change. Now, Mr. Trump not applying his mind on connected countries like Vietnam. How the connected countries they are going to treat, we don't know. And the reciprocal tariffs also, he clearly mentioned that for India also, they are looking for reciprocal tariff. And within the framework, there are two options for them. One is for applying, for example, if we charge 15% for a particular good, and they will also charge 15%, that is one methodology. And second methodology is if we take the average tariff of a country, our average tariff for US will be in the range of particular percent, and their tariff may be lower. So the difference tariff they may impose as a methodology too. And in both scenarios, apparel, we expect that 5 to 6% impact will be there for Indian apparel. So it's not massive. And in both scenarios, definitely we will have an edge compared to China, Mexico, and even other countries. So definitely by going with the current trend, we are confident order flow will increase to India. This is what we are getting the feeling from the buyers, and a lot of rapid inquiries are coming to our own members, and industry is so active now, everyone expecting surge in orders in the near term.
Can you put this in context of overall Indian exports and the latest numbers to US and overall garment exports?
Indian numbers, first time the January, we witnessed the $1.6 billion of apparel exports from India. Normally, our monthly run rate used to be in the range of $1.2 to $1.3 billion. It's a healthy sign. We need to see whether we are sustaining it. I am confident with the plus or minus 2-3%, we can sustain the momentum. From here, if we take $1.5 to $1.6 billion as a base, we need to reach $2 billion a month. That is what the real growth is, what we are expecting. And for example, now every developed market, we can see a very similar trend. Developed markets don't grow beyond 1 or 2%. For example, a recent data of 2024 of European Union imports, they imported around $92 billion with a year-on-year growth of 1.3, 1.5%. So all developed markets will grow 1 or 2% only because of the massive size. So only which countries grabbing other countries' market share, that is where the game is there. And how industry is equipping now, we are seeing a lot of activities on expansion space also. Even if we look into the data of recent import of sewing machine, knitting machines. You know that a lot of apparel making machineries, including processing and knitting and sewing machines, we are still import dependent. The April to November, we imported around $1.18 billion of these kind of machinery. That means industry is gearing up for expansion. Particularly the knitting machines year-on-year growth is in the range of 26% and sewing machines in the range of 27%.
So this is not replacement.
No, replacement may be a minimal because last 2-3 years already rapid investments happened post-COVID also. So majority of, even we had our channel check with machinery importers at the ecosystem. Everyone is telling that factories are expanding. Everyone drawing up their plans to, that is much needed because India needs scale, competitiveness, specialization. This is right time actually to scale up and show the buyers. One of the very important thing is China will be always capacity ready, and whenever inflow comes, they will be ready with option A, B, C, D, E. And we need to follow that methodology in apparel. We can't say that you give order and then we will build capacities. Now, opportunity will be definitely there. Even with the end of all these noises around, we feel that relative terms, we will be least impacted in apparel. I don't know about other sectors. Maybe some sectors have their own concerns. But apparel and home textile and textiles, definitely this will be a positive sign. And very, very important factor, we need to go to the US with our wish list, and also we need to give some kind of a benefit. For example, US cotton, if we import, we are imposing 11% duty. Now, the China is going to already announce that they are imposing duty on US cotton. So, US need customers now. Cotton is a very, very sensitive crop in US. So, US need India to sell their cotton. What we need to do, our policymakers can take this as an advantage and reduce import duty on cotton and ask the reciprocal methodology or something. We need to ask, please reduce on our apparel. So that in one stroke, we can bring a win-win situation by reducing cotton import duty and asking them to reduce apparel duty for us so that we can create more jobs at one stroke.
When you said about the run rate of about $1.5 to $1.6 billion, that's total apparel exports, right?
Yes.
And of that, how much would go to the US?
Around 30-35% we always export to US. Recent times, little increase, and quarter of 30-35% of our dependency is there with US.
How much of our cotton imports are we sourcing from the US, roughly?
Cotton imports very minimal. We majority, few variety of cotton like used in home textile, very fine varieties we used to import from US and Australia. But the numbers are very minimal. We depends mainly South India. We all importing majority with African cotton. Because now the 11% import duty created a turbulence. Because now 11% import duty, it may not be viable for us to import. Now few African nations, due to the facts, whatever we have, the duty is only 5.5%. So now the industry is using that as an opportunity and importing from African countries.
And of our total cotton consumption for apparel or textile, how much are we importing as a percentage?
Around 10% to 12% to 15% year on year, it will change, but 10 to 12% we used to import.
I think balance 90% or so is met through domestic product.
Yes. We are one of the largest cotton producing country. Farmers also well protected with MSP. MSP is now the higher than the world prices, and farmers are getting very fair prices, and we have a robust sourcing mechanism also with the CCA in place, Cotton Corporation of India. So cotton ecosystem is farmers also well protected, and government also taking a lot of efforts to improve the yield of farmers. They are taking it as a mission mode now. So it's right time to rebalance, because raw material stage we should not tax more. It's right time to use this crisis as an opportunity and reduce the duties for import of US cotton and get the benefit in apparel.
Right. Thank you so much for joining me. Talking about obesity is important. March 4th, Tuesday, was World Obesity Day. Obesity is rising sharply in India, similar to other countries, but in India, the prevalence of obesity, as defined by a body mass index greater or equal to 24 kilograms per meter square, is about 11%, which is higher than many other low middle income countries and comparable to rates in high middle income countries. According to the National Family Health Survey 5, the prevalence of overweight and obesity was about 44% amongst men and 41% amongst women. This is an increase of about 6.3% for men and about 5% compared to NFHS 4 findings. And there is also a divide between urban and rural, which is that about 13 to 50% of the urban population and about 8 to 38% of the rural population are affected. Obesity is more commonly seen in women compared to men, and importantly and critically is increasing in children and adolescents. An important fact to note is that the Asian Indian obesity differs from that of white Caucasians, as Asian Indians have more tonal, truncal, intra-abdominal and subcutaneous adipose tissue, and more on all of that very shortly. Obesity is, and the reason we're talking about is, linked to many lifestyle diseases, being why it's an important issue to discuss at the workplace as well, and how to discuss it. I reached out to Dr. Chandrakant Lahariya, a well-known primary care physician, health policy researcher, and also founder-director of the People-centric health systems. Dr. Lahariya spent several years in public health at the World Health Organization, and I began by asking him why he felt there was a big cost and an economic cost to obesity, as he had argued in a recent article in The Hindu.
So obesity definition keep changing and varies from one country to another country. But for long, one of the accepted approach to define overweight and obesity was body mass index. Like there is a broader consensus that a body mass index of more than 23 is overweight or obese. In certain European settings, it's a 27, which is obesity. In India, at 25 body mass index, which was obesity. And here I can clarify that what is body mass index. So body mass index is your weight in kg divided by your height in meter square. So height in meter square at the denominator and body weight in kilogram, and that gives you body mass index. So body mass index has been used variably, different countries, different parameters. For Asians and Indians, it's a little lower, and for other settings, it's a little higher. However, now there is a consensus that body mass index is not very good parameter, because what has been realized, and this is a concept called thin fat Indian, that Indians who are slim and within normal body mass index often have been found high body fat. So one Indian and one European with the same body mass index, Indian might have far greater fat, and then European or other population group may have a much lower fat. So BMI is now discounted or not considered a very good parameter. So there are new parameters such as waist circumference. In the female, waist circumference more than 80 centimeter. In a male, waist circumference more than 90 is considered obese. Similarly, there are other parameters, so waist to hip ratio or waist to height ratio. If waist to height ratio is more than 0.5, then it is considered obesity. So there are multiple definitions, but what is broadly agreed, and now there is a new definition globally, which defines of approach obesity as a clinical obesity, that a clinical condition because of excess fat in your body, you are considered obese. Within India, now there is a new guideline which have come recently, which say that body mass index more than 23 plus some other parameters, you are considered obese, grade 1, grade 2 obesity. Grade 1 without clinical conditions and grade 2 with clinical condition. But anyone who is more than 23 is obese as per some of the recent Indian definition.
Right. And when you argue that there is a hefty cost to pay, and which you also are referring to economic terms, could you explain why you're saying so?
There is a lot of data and evidence emerging. Of course, these are estimates. These estimates indicate that in the year 2019, the total cost of obesity in India was around $28 billion, which translates to around like 1,700 or 1,800 rupee per capita per Indian. Now, these costs are associated with at least two factors. One is the cost of healthcare, because obese individuals are likely to have other comorbid conditions such as diabetes, hypertension. I'll talk about common soil hypothesis a little later. So one of the cost is healthcare cost. There is evidence which indicate that obese person spend 32% higher on the healthcare than the non-obese person. So there is a definitive cost of healthcare in obesity. Second cost is a productivity loss. If someone is obese and has a comorbid condition, that individual had to miss the office or workplace, or his or her productivity decline. So these are the direct costs, but there are many other indirect costs associated with obesity, societal cost and mental health issues which are associated with obesity. So everything put together, it translates to the 2019, the cost was $28 billion, which translates to approximately 1% of India's GDP, which is very high. And then what is worrying that there are estimates that this cost is likely to increase to 1.57% of GDP by 2030. And there are estimates that if nothing is done or insufficient is done to obesity, this cost will further rise. So because obesity is rising at a very high rate, like in the last 15 years, it had doubled. It had doubled in both children and adults. And last 3 decades, it had tripled in both age groups. More importantly, the obesity in India, the rate of rise in childhood obesity in India is one of the steepest in the world. Only 2 countries, Vietnam and Namibia, have a higher childhood obesity rising rate. So this is worrying. India has a big child and adolescent population. So all of these are worrying, and that's why we need to pay attention. And all of these have a cost. If you have obesity in childhood, which essentially translates a complication in the longer term. And I'll briefly introduce the idea of common soil hypothesis. It is widely accepted and proven scientifically, though obesity itself is a chronic disease as defined by WHO and many other associations, but obesity and diabetes are closely associated. Someone who is obese is likely to be diabetic, and that has its own cost. And we should remember that around 40% of Indians have abdominal obesity, adult Indian. There are Indians who have obesity, and then this obesity resulting in the liver disease, extra liver fat. There is a high cholesterol level, which can have a heart-related issue. And 25 crore Indians are either diabetic or pre-diabetic. That's 1 of every 4 adult Indian is diabetic. So these common soil hypothesis, diabesity, or there is a new term which is called ABCD, adiposity-based chronic disease, which is obesity. So adiposity, extra fat in body, essentially a single organ, and which has its cost. And if it affects in early childhood, if it is rising at a fast rate the way it is happening in India, it is worrying and it requires concrete interventions.
Quick question. So, in the context of individual, as in what can I do to test myself? And the second is a lot of companies and their employees are listen to this podcast. So, what could companies do as an initiative or an effort to do this? If so, or what should individuals do?
So, I think this is a very important point. So, one of the things people can do, they should be aware about their weight. Often people are not aware that what is their weight and what should be their optimal or ideal weight. So one of the broader principles to know your weight is that your height in centimeter, and if you are male, deduct 100 from that. So if you are 170 centimeter, your optimal weight should be 170 minus 100 for men. So 70 kg should be your weight. So if you are extra weight than 70 kg for a 170 centimeter person, then you are overweight and you need to bring your weight within that range. If you are a person is female, then the value is height in centimeter minus 105, and that will be your optimal weight. So one should be aware about their weight. Second thing is that if you are extra weight, you should definitely modify your diet and increase your physical activity. Anyone, whether normal weight or extra weight, will benefit by improved diet or healthier diet or reduce physical activity. Third thing is that what you should do, that everyone should reduce high fat, high salt, high sugar, or anything which is ultra-processed food. And you should increase your fruits, your vegetable, your legume consumption. So that's at individual level. But one of the things is that obesity is often likely to be affecting family, because the kind of diet everyone eat will affect everyone. So if one person is obese in family, you have a higher cholesterol level, it's likely to affect others. So get your lipid profile done once in every year. So those are the individual level. Third thing is that workplace should encourage, provide a weighing scale in bathroom or in those areas. Preventive health checkup should have a weight, height, and waist circumference measured. And similarly, there is a body fat composition analysis should be done. So raising awareness about obesity is important, and workplace can contribute. Most importantly, in India, we try to normalize excess weight and overweight. We feel it offending if someone is overweight and obese, and we don't want to tell that person. I would say the best service you can do to someone, don't try to normalize overweight. If someone is overweight, you should not say you look healthy or fit. You need to have a frank conversation that what is the ideal weight and how much do you weigh. So our societal thinking need to change. Individual, family, community, and institutional actions are required. And of course, there is a lot can be done on ultra-processed food, high fat, high sugar, high salt diet. Some regulations are required. We need to have a communities where we can promote physical activity. Schools are one of the area where intervention should be done.
Right. Dr. Lahariya, thank you so much for joining me.
Thank you very much for this important conversation.
That was the core report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.